You may have seen stories already. You may have heard me talk about it, or at least write about it. Signs are increasingly suggesting that we are at a turning point for lithium. For a little bit of a background, we see that back in 2022, lithium miners were rolling in cash because everyone wanted some of their white silvery stuff. But commodities have cycles, as we know. And since EVs have taken longer than expected, too much supply came online at once and demand has then softened, the sector has been in a rut for the last couple of years. It may change very soon. In fact, and this is obviously an opinion, but I think we may be on the verge of a pivot as strong signs of recovery and likely a bottom are in. So what happened was that back in August, a mine owned by CATL was halted because of the expiration of a permit. And the mine is about 6% of global production. At the time, it was expected to be closed for about 3 months. And I'll get to more on that in just a second. As you know, China is a powerhouse in lithium. If we see in the map over there, we can see how they are not only a substantial producer, but they also have a significant role in refining, which is, one of the issues that the West has, and they have a big role in a lot of these refining, metal refinings and minerals refining, and with military parades, and that's not getting any easier. So it's not getting easier. Now, CATL is one of the largest producers, going into the details of this company. And it's also a leader in terms of batteries. So they supply major car makers. So Tesla, Volkswagen, Toyota, and more. So the thing is, more mines in China could be affected by this regulatory clampdown, and potentially up to 240 kilotons of lithium carbonate equivalent of Chinese lithium supply is at risk. And this equals to about 15% of global supply, which is a lot, as you can see. And you can understand how these stocks in the sector reacted so quickly. So we saw huge moves in Lithium Americas, Lithium Argentina, Mineral Resources, PLS, Liontown, and many more. The prices for concentrate and chemicals also have seen a slight improvement, and now we get to the detail, very juicy detail. So UBS, on this note, they point to a much tighter supply reality than was expected. They have lifted their spodumene prices by 9 to 20. They have lifted their spodumene prices from 9 to 32%. As well as, let me just grab this, as well as their chemical expectations. So the carbonate hydroxide projections by 4 to 17%, and that's through calendar year 2025 to 28. And this is all pointing to a deeper analysis that they did. So they've done a deep dive, they call it, on the different mines in China. And we go to the second part of this note that I wanted to show. The note is longer, but this is what we're gonna be looking at here. So they list strict execution of mining rights investigation by the government. So this is the expected sort of wider clampdown, and it's happening. It's really happening, and they go deeper into this. So in addition to the CATL mine, Sangi, it's idle for 1 to 2 months. The CATL mine is not going to be halted for 3 months as is expected when it was announced, but it's going to be up to 12 months. And then 7 of the lepidolite mines are also going to be disrupted after September 30. So by the end of this month. And then another mine is going to be trimming production. They also have some comments in terms of a petalite supply coming from a cobalt mine in Zimbabwe, but it's owned by a Chinese company, so that's the connection. So that's also going to be disrupted. They also mentioned Zijin mining, which is going to be disruptions there. So we're seeing 1 to 3% plus 2 to 3% more here. So there's little bits and pieces that are starting to add up to that figure, that 15%. And if we recall, CG mining is going to be removed from the gold index as well. So there's a lot of, you do a massive military parade, and it's not the only effect. You're gonna alienate people as well. So, but the interesting thing is, this is self-inflicted. They are, so the Chinese government is doing this to their own minds. So, if you put a sort of more deeper, why is this happening? Like, who knows? But it could be just because they want to lift the price, and that's why they're doing all of this. So, who knows? Anyway, now to make a quick comparison, to really have a bit of perspective into how big this can be for lithium in reality, we can compare to what happened with First Quantum's Cover Panama when it was halted in 2023. By the end of 2023, the impact on copper prices was quite swift, and that was only 1.5% of global production, and this is 15. So, the scale of this could be potentially a lot bigger. Now Canaccord, which is the source that I tend to use the most, but they haven't updated the price sheet yet. I haven't seen a deeper dive into it, but I'll keep an eye, and if I get that, I'll make sure to comment on it. But a couple of weeks ago, they did say that they called the recent low as a bottom, and they were expecting that with the delays in new capacity or cancellations in plant capacity, they remain constructive in terms of pricing. To me, this feels like a turning point. Now, will this stick? It's hard to say. When I first tweeted about this when the news came out, like, is this going to stick? Like, it could get all sorted in a couple of months. But now it's looking like it's going to be the situation going forward for a bit. 6 months, 12 months, who knows? What does seem kind of certain now, especially after reading this review a bit deeper, this does look like it's going to bleed into a lot of other mines, and even not only Chinese mines in China, but also Chinese-owned mines in other countries. So this is definitely substantial and not likely to be solved quickly. And even though this is not yet a full solution, it is definitely a good sign for those of us who believe in the long-term bull case for lithium. So in my opinion, I think that the time for lithium to shine again is very near, and we're going to see a lot more good developments coming up. So where do you stand on this one? I would love to hear. If you enjoy this market brief, follow us to make sure that you catch the next video. And that's it for today. Thanks for watching.